This is the Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set for gains after the S&P 500 notches its best quarter in 6 years, with fresh data underscoring U.S. economic resilience. Chip makers also closing out their best 3 months ever. The yen slide, prompting traders to seek protection against possible intervention, with 163 to the dollar shaping as the next red line. And Donald Trump reports $1.4 billion in annual crypto earnings as his financial disclosures reignite concerns he's profiting from the presidency.
I'm Haidi, Stroud-Watts here in Sydney. Take a look at the setup for trading across Asia. And as Shery mentioned, we're looking like quite a bit of buoyance when it comes to sentiment being revived. The eco front in the US providing a pretty solid backdrop, given that we did see US equities capping their best quarter in 6 years. That rally in chip makers, in tech stocks, amidst these signs of broader economic resilience, despite, of course, the rise that we've seen in domestic oil and gas prices and the concerns over the worries over the consumer, as well as the path to Fed tightening there. But take a look at how we sort of traded in the last part of the session there. The upside of 0.8% looking like we'll pass through to the Asian session as well. Kospi futures are looking pretty solid at 1.6% higher. We'll obviously get that tailwind from the chip makers rallying overnight. And Chicago Nikkei futures looking a little bit softer. But really, when it comes to Japan, it is about the yen slide to a 4-decade low. As Shery mentioned, beyond 162, we are watching for intervention signs. We've had a lot of verbal jawboning, of course, but that's done very little to kind of boost sentiment in the currency. We're also watching the geopolitical situation. We're seeing a bit of a steadying. The US and Iran still being monitored in terms of these upcoming talks. The return of shipping through the Strait of Hormuz is still ongoing there as well. Still, for the quarter, the biggest drop since the pandemic. We are at the moment seeing New York traded crude putting on about 0.7%, Shery.
Plenty to discuss in the markets. Let's bring in Bloomberg MLive strategist Mark Cranfield for more. Mark, let's start with the historic news that Haidi just mentioned, because 40-year lows, we haven't seen these levels for the yen since 1986. The markets seem to be openly testing now Japanese authorities.
Yeah, well, they're getting encouragement to do so, because we had the report that came out yesterday confirming that the Japanese authorities did not intervene in the period which ended June the 26th, so for about a month. Even though dollar yen was creeping higher, there was no actual intervention from the Japanese authorities to try and reverse that direction. So clearly, that's an encouragement to aggressive traders. They want to push the yen a little bit lower, even providing that the pace of yen declines is not too fast. The traders are getting the message that the Japanese authorities are not too concerned about that. So they're going to step back for the time being and let that play out. And of course, the flip side is that US yields are relatively high, and they rose again last night. So that's obviously encouraging people to buy the US dollar. But it's interesting you talk about the 1980s, 1986 there. Well, if traders go back and they look at that price action, one thing that might surprise them is how quickly dollar yen declined from around 260 to 160. So it doesn't mean to say that we're going to see a quick reversal of that. Markets are much more complex these days than they were back in the 1980s. But it does show you that in terms of parameters, guidelines as to where dollar yen is going, we're pretty much in new territory here. So the upside really depends on US rates, the response from the Japanese authorities, and it could go a lot further than people are originally thinking.
Mark, what we've kind of seen is this being beyond the ability of policymakers to be able to do very much, right? Are we seeing broader impact on the rest of Japanese markets? Because the long-held adage has been how good it is for exporters. Does that still make sense as a trade?
Yeah, certainly it's an encouragement to companies who are in that sector exporting, but they are competing, of course, with Korean companies and Chinese companies as well. And the Korean won is staying relatively weak against the Japanese yen as well. So there's not a huge benefit there. One place where it's starting to get a little bit dangerous again is the Japanese bond market, because clearly we saw at the beginning of that yesterday, the curve was steepening quite quickly, long-term yields rising as the yen got weaker. And that's clearly the message that comes between the two markets here, is the longer the yen stays weak, the worse that is for long-term inflation trends, and the more pressure there will be on long-term Japanese bonds. So clearly, it's not without consequences. If you allow the Japanese yen to be weak for an extended period, you have to think about what does that mean for interest rates in Japan. Even though it might be a benefit to the stock market, it could also mean that the housing market will start to be impacted as those long-term rates feed through into mortgage rates. So there's a lot for Japanese authorities to consider here, and they have to decide which one is the most important. For now, they seem to think that having a strong equity market is probably the best case for them.
And how are they going to ensure that? It seems Japanese authorities are also, together with the Koreans, betting on this artificial intelligence boom. Perhaps not surprising, Mark, given, of course, the incredible rally that we've seen in the U.S. as well. The Philadelphia Semiconductor Index up about, 100% in the past quarter or so.
Yeah, but of course, the encouragement for all these chip maker spending, the investment into data centers and everything that we're hearing from both Japan and Korea. The flip side of that is the hyperscalers in the United States, how much spending they are expected to do over the next few years. Recent projections suggest there's going to be $1 trillion worth of money spent by the likes of Microsoft, Amazon, Google. These kind of companies, they're going to be spending enormous amounts of money to build capacity to use AI products. The people that benefit the most are particularly companies in Korea and Japan to some extent as well. So that's why they're encouraged to do all that spending. It's probably going to be fine through this quarter. We're going to get earnings pretty soon. United States will be doing their second quarter earnings. It looks as though it's going to be a good season for that. There will come a tipping point when the hyperscalers will probably have to say, we've been overspending. We've been doing it too quickly. We need to dial back. When they give that signal that it's time to dial back, that will be a negative across the global equity market. We're not there yet. It's something that people are looking out for. In the near term, it's still very encouraging how much they're spending, how profitable chip makers are. But we are getting closer to that point where the hyperscalers need to justify this enormous amount of spending. And one day investors will say the numbers don't add up and they'll push back. But probably not just yet.
Mark Cranfield, Bloomberg MLive strategist there with an insight into the markets as we're also trying to understand the U.S. economy, and we're continuing to see some strength there. We are seeing job openings little changed in May, perhaps signaling that at least when it comes to labor demand, that remains steady. Meanwhile, consumer confidence edged up in June. We had lower gasoline prices helping offset concerns about job opportunities. Our Fed and economy reporter Enda Curran joins us now with more on this. And Enda, I mean, we are headed towards the payrolls numbers on Thursday, coming a little bit earlier this week because of Independence Day. But how's the setup looking going into these numbers?
It's looking pretty good, Shery. You mentioned the job openings, the JOLTS data, that came in at around 7.6 million for the month of May. That's above the revised figure for April, above the 7.3 million that economists were expecting. There was plenty of openings, plenty of demand in the construction sector, probably reflecting some of that AI boom that Mark was talking about. And there was plenty of openings in healthcare and leisure. A lot of that is being attributed to the World Cup going on here at the moment, as you know, everybody was ramping up ahead of that. So a decent set of numbers. The quits rate also not signaling anything especially of concern. And as you say, it's feeding into the all-important official jobs data that comes on Thursday. That's expected to show 100-odd thousand plus jobs created. That's well above the so-called break-even rate, well above it. And the hiring has been becoming more broad-based. Now, it does not mean the US labour market is suddenly becoming tight or especially strong, but it does mean at the very least it has found its feet after last year, which was the worst year for jobs creation in 20 years.
Is that why we're seeing even consumer confidence edging up? Because with the accelerating inflation numbers, I wouldn't have thought that Americans would be happy with what they're seeing out there.
Headline inflation was at a 3-year high, or is at a 3-year high, Shery. So, you know, there's no doubt we're getting contradictory signals here. Prices at the gas pump are much higher than they otherwise were before the war. Inflation rates where they are, wage gains being offset and eroded by inflation. But at the same time, retail spending and the different gauges of retail spending, the kind of the consumer the spending gauge, and of course the PCE gauge that we get, all pointing towards resilience. Companies are talking about pretty decent profit margins. Yes, there's nuance. And yes, of course, there's the whole debate about K-shaped economy, who's doing the spending, but the aggregate data on retail spending and on consumer confidence is holding up, and certainly much better than anticipated given the pressures from the inflation side. Now, the question is, how long does that hold up? Some of it was said to be down to the refunds from the annual tax refunds this year, which of course gave consumers a bit of a lift. That might fade, and if we do get into territory where the Fed is talking about raising interest rates, well then you probably will see some kind of a blowback on consumers too.
Yeah, let's talk a little bit more about the Fed, especially a Kevin Warsh-led Fed. What are the expectations right now that they will need to hike rates, and what could be the implications for the markets, especially as we continue to see that U.S. exceptionalism narrative playing out?
Well, traders are certainly moving towards a Fed rate hike, perhaps at some point this year. You know, some traders even betting on as soon as July. That probably feels a bit too soon. We do have Chairman Warsh speaking publicly tomorrow at the ECB conference in Sintra. He'll be on that panel with other leading central bankers. That may be an opportunity for him to come along and spell out further some of his thinking on inflation. Remember last week, or whenever it was, at a Fed press conference a couple of weeks ago, he was very clear: price stability and a 2% inflation target, but he stopped short of saying exactly what he will do to ensure price stability and to get inflation back to the 2% target. That kind of void is what a lot of Wall Street economists have been seizing on since. So maybe tomorrow he might come out and expand on his views. We don't know yet what he will say, or he might play it safe. But either way, it's going to be probably the first opportunity we've had since his first press conference to hear what he is thinking about policy. That will set us up heading into the jobs data, and of course then heading into that July meeting later next month.
Our Fed and economy reporter Enda Karan there. Well, coming up on the Asia Trade, we'll be taking a deeper look into President Trump's latest financial disclosures, $1.4 billion in earnings from crypto and meme coin businesses. Plus, the Atlassian CEO, Cannon-Brookes, gives us his outlook when it comes to software businesses facing AI disruption. The company shares down 62% over the past year. Much more ahead. This is Bloomberg. President Trump has reported yearly earnings of at least $1.4 billion from crypto and meme coin-related businesses. That far exceeds the income from his hotels and golf resorts, renewing concerns that he's profiting from the presidency. Let's get more on Trump's annual financial disclosure. Our Bloomberg senior editor, Derek Warbank, joins us now. And Derek, there's been long-held concerns from Trump's critics, right, of this mixing of personal financial interests and his role as the president. What does this information divulge to us?
Yeah, Heidi, and this will do nothing to sort of quell some of those concerns, many of them from Democrats, that this president is profiting in unique and precedent-setting ways from his office, as well as, sort of having business interests that are somewhat aligned in. What we do know is that the president reported earning at least $1.4 billion in 2025 from crypto and meme coin-related businesses. That's, again, according to a financial disclosure that he files annually that was released today by the Office of Government Ethics. You're talking here about getting more than $594 million from sales by World Liberty Financial, a crypto firm whose co-founders include Trump, his sons, as well as Stephen Witkoff. And so you're talking about some of these things. This is to put into perspective. Presidents, when they get into office, they make somewhere around $400,000 a year as like a salary from the United States government. There are things that they have to pay for and all of that. A usual side hustle that you would be talking about for presidents has been writing maybe books that can bring in, a couple of low $1 million. So this is by orders of magnitude more compensation. And I think, there have been a lot of complaints from Democrats that the president has been able to leverage his position for gains for some of these companies. And we're going to see a lot of that go forward, particularly if Democrats do well in the midterm elections in November. They've made no secret that the Senate and House with a Democratic majority would be far more open to investigating the president and this sort of like web of business interests that he has. But look, Donald Trump is a very unique person in the presidency. He was far wealthier than most people who would seek the office when he sought the office. He had a much more complicated suite of things that were financial interests, and he has had a he has had a wealth increase that you've seen as he's gone through this first year and a half of the presidency. So this is just sort of, as I say, laying it out. The headline number again, though, earning at least $1.4 billion in 2025 in crypto and meme coin related businesses.
Derek, is it just about the president himself? I understand these disclosures also reveal data when it comes to the First Lady, but there are also broader concerns about his children, his family, their spouses, for example. What else do we know?
Well, yeah, and I think that is, getting into the idea of sort of like the web of interest, as I mentioned, right? The president is certainly somebody who has his name on an awful lot of things. He is involved in a lot of things, but the White House has been very clear that in some cases the president is not directing a lot of this. They've been clear that other people are directing the interest. Now, a lot of these happen to be people that the president is closely tied to. Certainly there are deals that go on where the fact that you might be doing business with the president's son or the president's, whoever else it might be that's kind of linked to him may be a consideration in the idea of doing the deal. And as I say, this is one of those things that Democrats are really, really happy to talk about in the campaign season as something that they want to investigate. We see John Ossoff, the senator from Georgia, who is both on his own campaign and also somebody who is mentioned as a potential 2028 presidential candidate, making a lot of speeches where really the idea of this kind of entanglement is a primary focus. Democrats right now see the idea of potentially investigating what they call corruption to be something that they think is a potential vote winner. And so you're going to see, I think, Democrats talk an awful lot about this. This is one of, though, I have to say, in scale, far bigger disclosure forms than you're likely to see from most other candidates. It's going to take a while to fully go through that and kind of parse some of these things.
Derek Wellbank, our Bloomberg senior editor there, and another story that we're actually following in the U.S. as well. The Supreme Court has rejected President Trump's plan to restrict birthright citizenship, deeming it unconstitutional. The court says Trump's executive order can't be squared with the Constitution's 14th Amendment, which guarantees citizenship to almost everyone born on U.S. soil. Trump suggested on social media that the issue could now be addressed in Congress through legislation. Qatar says U.S. envoys Jared Kushner and Steve Witkoff have arrived in Doha, but it's downplaying the prospects of a breakthrough in talks with Iran, with no direct meetings planned. Tehran has indicated that challenges remain regarding the release of frozen assets and the management of the Strait of Hormuz. Qatar says technical meetings between lower-ranking representatives are scheduled for Wednesday.
Still ahead on the Asia trade, Nike shares are slipping in extended trade after cautious commentary from executives offsetting a revenue beat in the fourth quarter. We get more on the outlook next. This is Bloomberg. Nike shares fell in late trade after a cautious demand outlook, really offsetting a fourth quarter earnings beat. Even so, Bloomberg Intelligence says a turnaround now underway could regain lost ground. Senior analyst Poonam Goyal joins us now with more. So what is this about? this concern about sort of elevated consumer anxiety. Is this something that is structural, or is it something that can be seen as transitory?
I would say it's seen as transitory right now because the outlook that we're talking about, which was much lower than actually anyone had anticipated, is due to tougher comparisons from last year. So if you think about Nike's last fiscal 1H, they really had been liquidating inventory and they've been trying to really rebalance North America. So as they lap that and the wholesale push that they had, compares do get tougher, which is why the first half outlook of their fiscal year is lower than anyone had anticipated. We do think that things will pick up in calendar 1H for Nike, and we think at their Investor Day, which is in mid-November, they will highlight a path to return to growth over the medium to longer term. It's not an overnight fix.
Paul-Alain, what are the concerns over the China market in particular?
China, there's a few concerns there. One, Nike needs to be seen as a premium brand there. It's currently not being seen as a premium brand. So they need to press the pedal on innovation, and they need to be more integrated with the Chinese consumer, focusing on local endorsements, local sports, and really getting the consumer entrenched in the ecosystem that it operates in. So they need to fix inventory. They need to get the brand to be seen as premium. Stop discounting, which won't happen until inventories are right-sized. And that could take up to 12 months in our view.
There's been a lot of focus in terms of the individual sports, right? But there's also been missteps there in terms of a stock or merchandise not being released on time for the World Cup, for example. Are they trying to prioritise this part of the business?
I think they are. I think they understand that sports is an important moment for Nike. Even on the call today, when Elliot Hill talked about just the World Cup, it was pretty apparent that they want to make sure that they use the brand heat, that they get around these sporting events and really push product and customer demand forward for the next 6 to 12 months. So it's not about just the moment. It's about the heat that they carry forward from these events into the future as well.
Right, Poonam Goyal there, Bloomberg Intelligence Senior Analyst for E-commerce and Athleisure. And here are some of the other stories that we're following on the corporate front. Susquehanna has won a court order freezing brokerage accounts it says are tied to a $100 million insider trading scheme. It's also able to subpoena brokers to identify account holders. The firm alleges it lost more than $70 million to traders it believes were tipped off ahead of China's May crackdown on cross-border securities firms. Toyota is setting up a joint venture with the air taxi maker Joby Aviation ahead of a planned additional investment of $250 million. Toyota became the California-based firm's largest shareholder last year. The U.S. is yet to certify commercial operations for Joby's electric, vertical takeoff, and landing vehicles. We are now about half an hour away from the market opens in Japan, South Korea, and Australia. We continue to see the weakness in the yen holding at that 162.57 level against the greenback, as we're not seeing a lot of movement in the Aussie right now. We continue to watch, of course, U.S. futures after we saw stocks rising in the New York session. We had the S&P 500 finishing its best quarter in 6 years. The Philadelphia Semiconductor Index also posting its best quarter ever. This is Bloomberg. Heidi, we're on intervention watch here in Japan yet again because we have now the yen breaking above that 162 level for the first time since 1986. This is pretty historic. I mean, after all of the intervention earlier this year of more than $70 billion, intervention that we saw in 2024 as well, we continue to break new levels. Right now, strategy is seeing 163 to 165 as the next potential intervention zone. But really markets testing Japanese authorities. Of course, we had the finance minister come out. We had the chief cabinet secretary yesterday as well, both really emphasizing that they're ready to act at any time. But given that we also got finance minister data that showed that Japan did not actually intervene during the past month, despite the fact that we were flirting with 162. Markets seem more emboldened to keep pushing the yen weaker and weaker against the dollar. And of course, Haidi, fundamentals are also an issue, right? I mean, you have a strong U.S. dollar, you have strong U.S. economic data, and the rate differentials are just key.
It's really interesting, Shery, that the fact that we had some sense of restraint from policymakers, from financial policymakers in Japan, perhaps that just gives a green light for some of these more aggressive traders to keep pushing the yen low, keep pushing the dollar higher, as long as that sort of speed of the ascent of the dollar isn't too quickly. We're now hearing that potentially that path towards that 164, 165 zone is plausible. Beyond that, we may need a little bit more firmer fundamentals, higher US rates, for example, to maintain that dollar momentum. But certainly when it comes to how we're tracking with the US economy and these expectations for the Fed, that's not entirely unplausible either, right? But Shery, take a look at how all of this is playing into Japanese stocks. We were talking a little bit earlier about this kind of historic correlation between the weakness in the yen and how much it benefits the Japanese equity markets. And we have seen that, right? Rising to a record high. But some of that currency benefit for exporters might be fading, particularly in light of the fact that we also have won weakness and a red-hot Korean equity market as well, right? We are also watching crude. We're seeing New York traded crude kind of just creeping up a little bit, 0.8% at the moment. Pretty steady trading as we've seen Hormuz traffic climbing. Now supertankers are sailing into the Persian Gulf, despite, of course, concerns of the flare-up in tensions just over the weekend. For the quarter, though, there was the biggest drop for oil since the pandemic. We're still monitoring those ongoing peace talks between the US and Iran and the consistency of that return of shipping as well, Shery.
Heidi, let's turn to geopolitical news because Japanese Prime Minister Sanae Takaichi is now beginning a 3-day trip to India on Wednesday, where she'll meet with her Indian counterpart Narendra Modi. They'll discuss economic and security ties with an eye on China's growing influence. Let's look closer at the goals of his summit with Kristi Govella, Senior Advisor and Japan Chair at the Center for Strategic and International Studies. Kristi, great to have you with us. So this is Prime Minister Takaichi's first visit to India since taking office. What's her main objective here, and how important is India as a partner?
So yes, this is Takaichi's first trip to India, and I think overall her biggest goal is to demonstrate that Japan does consider India an essential partner in the Indo-Pacific and that Japan is really committed to deepening relationships. Japan has steadily been strengthening relationships with India over the past couple of decades, bilaterally as well as groupings such as the Quad. And this really has its roots, in the mid-2000s when former Prime Minister Abe put forward this vision of what he called the confluence of two seas, describing India as a key part of the region. And in that, he really wanted to talk about India balancing China, essentially. So, Takaichi's going to want to demonstrate that India is still an important partner, no matter how tough U.S.-India relations are. And she has a number of deliverables she's looking to achieve.
I mean, to your point, we have seen dozens of these dialogue mechanisms between Japan and India. How effective have they been? And what's been the focus so far? Are you seeing any changes in the trend as we continue to see perhaps a more assertive China and economic security becomes more vital?
So I think overall we've seen a trend towards strengthening, particularly bilaterally. Last year in 2025, there was a major summit between Japan and India where they put forward a joint vision for the next decade. And this really was designed to demonstrate the breadth and the growing depth of Japan-India relations. So it covered everything from trade and investment to economic security, infrastructure and mobility, climate, technology, innovation, health, people-to-people ties, et cetera. So, I think both countries over time have been really trying to move forward in multiple dimensions. And through venues like the Quad, we've also seen increasing security cooperation. So I think in this upcoming visit, I think there are some key themes that will emerge, certainly economic security, emerging technologies like AI, investment, which is always a core concern, but also, more generally cooperating on the kinds of global challenges that we see on energy and other issues.
How much more crucial have bilateral relations become in this day and age when you have the Trump administration perhaps defocusing on these multilateral initiatives such as Quad that you mentioned, even the U.S.-led Indo-Pacific strategy itself?
Right now, there is a lot of fluctuation, or at least perceived change, in what the U.S. position towards the Indo-Pacific and more generally international relations is. I think when you actually look at a lot of the engagement of the U.S., there is a fair amount of continuity. For example, the fact that there has not been a Quad leaders level meeting since the beginning of the second Trump administration tends to attract a great deal of attention. But we have seen a great deal of movement at the foreign ministers' meetings. For example, last month there was a big foreign ministers meeting that really did show tangible progress on things like maritime security, supply chains, critical minerals, technology, things like undersea cables. So, I think that there is some continuity, but it is certainly true that, Japan finds itself trying to fill into something of a leadership gap in the region. And particularly when it comes to keeping India engaged, I think that Japanese leaders have seen themselves as responsible for playing that role and offering some stability at a time when U.S. commitments are increasingly in question and when the U.S. is more focused on its own domestic priorities.
Not to mention perhaps how aligned they might be on the China issue at a time when Japan is feeling the heat from those export controls when it comes to critical minerals. What more can both countries do in terms of economic cooperation to mitigate these risks?
So it's definitely true that tensions between Japan and China are mounting. They have been since November of last year, when Prime Minister Takaichi made some comments about Taiwan in the Diet. Most recently this week, China placed another 20 Japanese entities onto an export control list and another 20 onto a watch list. And the main thing that's been attracting a lot of attention there has been critical minerals. So I think that when we see the deliverables for this Japan-India summit, we're expecting to see a joint declaration on economic security, which is also always an important area for Japan in general, but particularly now because of these tensions with China and this economic coercion over rare earths. So Japan and India are expected to announce a declaration that focuses on building resilient supply chains, and critical minerals are at the top of that list, along with things like semiconductors, clean energy, such as ammonia, ICT, information and communications technology like undersea cables. Those are all areas where dependence on China is an issue for security reasons and economic security reasons, as well as pharmaceuticals, which is an area where China has become increasingly competitive. So I think that all of these areas are areas where Japan and India can cooperate more in facing tensions with China.
Kristi, just quickly before I let you go, how does the strategic relationship between India and Russia complicate things for its partnership with Japan and the rest of the West?
The India-Russia partnership is always a difficult question. I think that this has been an issue since the start of the war in Ukraine in various ways. It is also interesting that we see Japan, has maintained some connections with Russia in terms of the Sakhalin pipeline and some kinds of energy ties. So in that sense, Japan is, sympathetic to some of the claims that it's necessary to cooperate with Russia. But it does put, in terms of Japan's interests, its relationship with India in tension with its relationship with the U.S. and other European countries. So I think we'll see Japan try to be diplomatic and focus on cooperation.
We'll have to leave the conversation here, but she's the Japan chair at CSIS. And of course, Haidi, we do have an alert on the Bloomberg that we need to get to.
Yeah, we have been watching the sort of mood music coming from Washington in particular in terms of these ongoing peace talks with Iran, right? Via the Wall Street Journal, we're hearing that President Trump has weighed a return to all-out war with Iran, holding multiple conversations with the Defense Secretary Hegseth, the chairman of the Joint Chiefs of Staff, General Kane as well, on potentially more strikes. The president has decided to stick with diplomatic talks for now, believing that another round of full-scale attacks could derail diplomacy and hurt the U.S.'s chance of dismantling Iran's nuclear program. So he has apparently told aides that he's okay if talks go past the August 18th deadline. Of course, we have the 60 days that is sort of on the clock now, but they're opting to stay with talks now. The president's preference is always diplomacy. He's fine if we blow past that August 18th deadline for a nuclear deal to give more time for these talks to take place. More ahead on the Asia trade. This is Bloomberg.
Take a look at how we're setting up for the South Korea market opens. Of course, this after a session of gains for the Wall Street session, with the Philadelphia Semiconductor Index posting its best quarter ever. We're seeing futures pointing to some upside. Of course, we also had news on the artificial intelligence side of things. Anthropic pushing deeper into life sciences. They launched Claude Science to automate biology and chemistry research. So we actually had some software names around drug discovery in the overnight session falling after the announcement. It's really to do with artificial intelligence remaining the dominant equity story right now, with the Philadelphia index up about 0.5%, 100%, I have to say, in the first half. But we talked to software giant Atlassian, and the company is actually downplaying those concerns about AI's impact on the sector, saying that demand for its tools remains strong and margins are expected to stay robust. CEO and co-founder Mike Cannon-Brookes spoke exclusively to Bloomberg about the company's growth outlook.
Very biased position, but I completely disagree with the narrative. Our demand has never been higher at the moment. Having spent all week with customers here and in across Europe, they're incredibly bullish on our future, and they continue to consume far more of our applications as their teams and businesses get more complicated.
OK, so the earnings story is there. You're seeing that demand, and yet I'm looking at the likes of Microsoft set for potentially its worst month in since about 2000. That stock is down about 20% this month. Your stock is down about 60% in the last 12 months. Is it the economic model and the pay-for-seat model? Is it a question mark for investors about whether or not you can sustain margins? It's been software as a service has been very rich on margins historically, but that's now being challenged. How can you convince? Are the margins going to remain as robust as they have been historically?
I believe so. There's obviously a concern that the cost of delivering great AI applications, the intelligence underneath, will continue to rise, so our cost of goods sold will get more complicated, margin will compress. We haven't seen that so far. We don't see that in our future. We've done a very good job of delivering amazing AI solutions to our customers. We have tens of millions of people that use our AI tools every single week, and we're still maintaining our margins where they are, and I believe it will only get better as you go forward, actually, as the...
margins will expand from here?
I think margins will continue to be strong. It's up to us to manage that, but we can certainly deploy a lot of great AI technologies. The cost of managing AI is changing every quarter, but I don't think that's an unmanageable problem.
Is the market just lacking nuance at the moment? It seems we've got this kind of big bucket of software companies, and we're just kind of leaving it as a big bucket, and we're treating everything in that bucket as the same. Is that, do we go through a process at every kind of major pivot point? You kind of see this happening. The market finds it difficult to target winners and losers. How long do you think that phase lasts for?
Look, I couldn't tell you how long it's going to last for, but I think it's totally true. I think you see the entire sort of sector trading as one, despite there being, I would argue, pretty significant differences between different software companies in terms of how they are taking on AI. It's an amazingly powerful technology transformation that we're going through, and every software company is challenged to take this new intelligence, this new electricity, if you want to call it, and how they deploy it to their customers to help them solve the problems that presumably they were solving beforehand in new and innovative ways.
I thought that you had also, just like some other companies, been cutting jobs not that long ago. There is no connection with AI there, then, when you cut jobs?
Not in the way that people point out. We continue to try to adapt our skill mix, right? We are doing very well in the AI area in terms of our investments, and very well in enterprise sales as we grow continually in the enterprise. We're now north of 600 customers of over $1 million a year in revenue. And so we needed to adjust our skill mix to having more people in those areas, for sure. You could argue that's driven by the AI transformation. It's partly true, but it's not in the way that people sort of apply this very simple lack of nuanced view of what AI is doing.
Atlassian CEO and co-founder Mike Cannon-Brookes speaking exclusively to Bloomberg's The Opening Trade. Well, the AI trade had a strong end to the quarter in the US, giving Asia some strong leads in today's session. Traders will also be watching that yen weakness, won as well for shares of exporters, as well as signs of intervention. Our markets reporter Anthony Stevens-Jones is now from Hong Kong. So, Anthony, lots to follow. What's sort of most interesting to you to start with?
What was interesting is how broad the tech trade was, to close out the quarter in the US. So we saw the stocks up 4%, and that's driven across the entire semi-supply chain. You saw server names very strong, CPU names very strong, GPU names very strong, and that was actually a follow-on from Asia. So it was quite an interesting thing to see Asia lead the tech trade actually overnight, where this kind of investments from Korea led into Europe. You had ASML up close to 6%, and that led into the US. So really Asia led the way, and now today, this morning, we start with a blank piece of paper into the second half of the year, and we want to see whether this kind of broadening out of the tech trade away from the mega caps like TSMC or Nvidia or Samsung and Hynix, whether that continues in the Asian session. We had a very strong close on the breadth of the rally in China, especially on yesterday with the Chinex up 4%. So that is the equity story, the broadening out of the tech trade. In terms of the FX story, we continue to see weakness in the yen and the won, but that's not really feeding into traditional exporters. So, for example, Toyota or Kia or BYD, these are the names that are really not benefiting from the export story in Asia, and whether the FX story is completely independent now becomes a different macro theme.
Yeah, and we'll get TSMC earnings becoming perhaps the next macro catalyst here. So we'll be watching for that in the tech sector. But at the same time, what's interesting is that we had that broadening out of the AI trade, but at the same time, the losers kept losing, like the software stocks, especially after Anthropic's really foray into life sciences. Is this market becoming more mature and more differentiating when it comes to which sectors you'll invest, even within the tech sector?
Oh, for sure. I think this, we are moving very much into the maturity of the AI trade, away from this mass of models and the kind of confusion. And now people are starting to use AI more aggressively. And you're getting a lot more data around usage, around pricing of tokens. And this is driving a more mature investment process. And people are starting to move down to move down the scale to try to understand where the bottlenecks lie. Now, on software, for example, you saw the Indian software sector fall out of bed yesterday. It was down more than 2%, and it's at the bottom end of a multi-year range. So it's a really kind of broad, complex trade at the moment.
Bloomberg Markets reporter Anthony Stevens there with the latest on the markets, and we do have more ahead. This is Bloomberg. We have breaking news on business sentiment here in Japan. The second quarter Tankan survey out at this moment, showing the large manufacturing index coming in at 22 for the second quarter. This is outperforming economists' expectations. Also, the number much larger than the previous quarter. This, of course, shows that positive readings mean more firms see conditions improving than worsening. It's really interesting because the second quarter, of course, we had to also deal with the Iran war and higher oil prices. But it seems the sentiment has been holding up. Even the outlook coming in at 17, better than economists had expected. For the non-manufacturing sector, also an improvement to 37. The outlook at 28. This is all for the second quarter number, showing solid business sentiment. Let's actually discuss these numbers with Japan economics and government reporter Yoshiaki Nohara. Yoshi, what stands out to you in these numbers?
I mean, it's a huge improvement, as you mentioned, that 22 for major manufacturers. That's a huge improvement. And that these numbers suggest to me that it makes it easier for the Bank of Japan to continue to raise interest rates because there's not much concern among companies about the economic outlook.
I wonder how much of this is also because of the weakness of the Japanese yen. I mean, we've continued to trend down. We're now past 162. How much of this sentiment is supported by the fact that a lot of these manufacturers also sell overseas?
Well, that's a good point. It's definitely, tailwind for, exporters such as major automakers. But at the same time, you have to remember that how much headache the weak yen has been causing for domestic-oriented companies. So it's a balancing act. So I can't say that it's all good for all Japanese companies.
Our Japan economics and government reporter Yoshiaki Nohara there. We are watching one stock as we head towards, in about 6 minutes or so, the start of trading across major markets, including here in Australia. South 32 is one that we're watching, with Alcoa agreeing to buy their bauxite, alumina and aluminium assets. The deal is valued as much as $5.6 billion US dollars there. So Alcoa to pay $3.1 billion in cash, about $1 billion in Alcoa shares, assuming $750 million of net debt and lease liability. So this is a significant expansion of Alcoa's integrated aluminium business. It strengthens its role as one of the biggest producers in the world, adding assets across the entire value chain. So it comes as long-term demand. That picture for aluminium continues to strengthen there. We'll be watching the result for South 32 in the markets today. Shareholders will hold about 6% of Alcoa once that deal is completed, and at least half of those shares will be distributed to shareholders, while the remainder can be sold. Last traded at $21.66 a piece on Tuesday for Alcoa, $23.36 for South 32. So that's what I'm watching, Shery.
And take a look at the broader markets. Of course, we continue to follow the tech sector, especially as we now have breaking news when it comes to Anthropic. The U.S. has lifted export controls on Claude's flagship consumer AI model, Fable 5, not to mention Mythos 5. So U.S. Commerce Secretary Lutnick now saying in a post on X that over the past 2 weeks, they have worked closely with Anthropic to analyze and approve Fable 5 to ensure alignment across the U.S. government and strengthen America's leadership in AI. And also Anthropic saying now that they've received notice from the Commerce Department that those export controls, not only on their consumer AI model, but also Mythos 5, have now been lifted. They will begin restoring access tomorrow. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg. This is the Asia trade. We're waiting. The major market opens across Asia. But of course, Haidi, we're also watching what's happening over in Hong Kong, away on holidays on Establishment Day. That was a 1997 handover of Hong Kong over to China. We have the flag raising ceremony to watch today. But of course, over in the markets is all about the tech sector, not to mention, of course, the ongoing tensions around Iran.
Yeah, looking like Hong Kong might miss out on an upside day, particularly when it comes to this revival of the strength in the tech and AI trade. Asian equities broadly looking like we'll see some positivity, capping their best quarter in nearly 17 years. Of course, the chip makers are a big part of that story. But overnight, we saw further signs of U.S. economic resilience, still solid labour market, really steady consumer spending numbers as well. So, Shery, a pretty good setup, unless you're the yen.
Right, the yen at that 1986 low, still trading past that 162 level against the U.S. dollar. We continue to watch for any signs of intervention. Markets really emboldened by the fact that in the past month, when we were flirting with that 162 level, Japanese authorities did not actually intervene in the markets. That's according to the Finance Ministry data. And take a look at the Nikkei right now. That was a positive upside. Of course, we talked about what was happening in the tech sector. We saw the Philadelphia Semiconductor Index seeing its best quarter ever. We just got breaking news that Anthropic has also received approval from the U.S. on those exports of key AI models, including Mythos. Nikkei up more than 1%. The yen still holding, and JGB's pressured right now as we get more news when it comes to fiscal spending around Prime Minister Takaichi's government. Of course, we have seen incredible fiscal spending, or at least plans to spend, not only here in Japan, but also in South Korea, where AI has become the pillar of growth for that economy. South Korea June exports right now rising 70.9% year on year, surpassing expectations. Perhaps not surprising given the strength of the semiconductor trade right now. You can see Kospi stocks gaining more than 1%. It's interesting how the Kospi is moving, because although we have all of this optimism around tech, around Samsung, SK Hynix, of course, expected to list in the U.S. as well, we do continue to see bouts of foreign selling, and that's also continuing to pressure the Korean won, that sitting at that mid-1500 levels, Haidi.
Yeah, take a look at what we're watching when it comes to oil in particular, because we had a fairly interesting report from the Wall Street Journal suggesting that we could see that August deadline when it comes to these US-Iran talks being blown out because the president is comfortable with some level of flexibility on that. So that's quite interesting, and whether or not that's going to be a situation of kind of kicking the can down the road, or whether it's going to be more conducive to achieving that nuclear deal with Iran. At the moment, we're seeing a bit of a shrug for markets on this war story, given that we're still watching and monitoring the next round of talks there. We're seeing Treasuries futures at one point really taking another leg lower following the month-end rebalancing in the New York session as well. The losses really being led on the long end. We are seeing some repricing of expectations from the Fed as well, given that newfound sense of resilience in the economic data there. Brent crude up by just about 0.7%, kind of reflecting what we've seen in trading in WTI as well. Australia looking pretty flat at the moment, but the stocks that we talked about a few minutes ago, South 32, Alcoa, with the sale of its aluminium and bauxite business to Alcoa, we're seeing South 32 gaining 8.5%, Alcoa seeing a decline about 5% in the session. Let's bring in for some analysis Hebe Chen, who's a senior market analyst at Vantage Markets. It'd be great to have you with us. So really, obviously a stellar quarter for equities and Asian equities. So much of this, as you say, being driven by two, to some extent to three markets, but really it is Korea, Taiwan, and then also Japan. Do we see a broadening of this at all, particularly as we have these conversations about the spread of the AI boom into more of a broader macroeconomic story?
Well, yes, I think indeed this is a quite also in a very narrow rally for the Asian region. Either you from the country perspective, as you mentioned, basically three countries doing the heavy lifting, or you from the sector perspective, basically just the AI engines doing all the heavy lifting. I think that your question whether or not it will get into broader into a macroeconomic story, I think that's quite likely in the terms that we're already seeing that because of the hype there, because of optimism there, not just the investors, but also I think from the government perspective, they're now trying to double down on this story and hoping to building up the AI ecosystem for the region-wide. So I think that would be a positive side for that, for the investors looking into this such a narrow, crowded rally. But that doesn't saying that it doesn't come with risk. The overcrowding is often exposed a higher and sharper for if that the tide changes, because that this rally has attracted so much liquidities, they're too concentrated. So once the tide has changed, that means that extreme volatilities will also happen quite naturally.
You've talked about some of the markets that have been left behind, China, India, much of the rest of the region. So much of this has also been the oil story, which is in the process of correcting itself for markets like India, for example. But do you see better opportunities within the tech theme, the AI theme, in a market more like China?
Well, I think yes, definitely there are opportunities. Actually, if you're looking back into 2025, the China's rally stories are largely driven by the technology. It's just that coming to the phase at this stage, the market just want more tangible progress, not just from a topic, the AI-related topic, but also want to see that really translate into the profit stories from the AI. But like in the China story and Indian story, they also coming from the quite fundamental, especially for China, is quite fundamental, the strength of the economy, whether or not they could not only support a AI story, but also support a recovery story, referring probably like a property, local, domestic consumption markets. They are probably one of the key draggers for the market, like a Chinese market.
We're obviously watching the yen and how much further it can go. That 164, 165 window is what a lot of market participants are watching now, particularly if we don't have meaningful attempts at intervention, right? What does this tell you about the influence of the Bank of Japan and of policymakers at this point?
Well, I think, yes, as you mentioned, they are not meaningful or like a material intervention, but they are sort of verbally intervened into the market as well. But we didn't see that much impacting for the direction of the Japanese yen. I was saying that 160 level itself is already a warning sign, potentially because of the level that has quite largely trigger the intervention potential risks that will already stop the buyers or stop the sellers at these levels quite largely. But what it really means, what they really have to question is about why the Japanese yen keep falling down. why the gap is keep widening, even that the Bank of Japan has already hiked twice. I think they were coming down to the question, it's not just the market is buying into the monetary outlook. As you can see, the bond yield is rising at the moment, but that doesn't translate into the higher currency, translate into a lower currency. That means the real crux of matter is about the physical credibilities for the Japanese currency.
Well, this is the thing, right? Even if you hike to the highest in 31 years, it's still internationally comparatively very low. But are there upsides to this? Because typically in the past, we've looked at yen weakness as something that really boosts Japanese exporters. Is the construct of Japanese equities market still one that benefits significantly?
Well, yes, indeed. I think that's a good question. That's the question is what the Bank of Japan and Japanese government, what's the real target they want to do? Are they trying to boost the economy, taking the leverage from a lower currency, or they just really, they do have meaningfully to want to put in a floor for the Japanese yen? I think that's something the market yet to get a very clear idea. So it kind of the tug of war in between that. The market is now buying into the fact that the Japanese Bank of Japan could potentially keep hiking because of inflation's there. But on the other hand, we are seeing a snowballing depth that questioning about the credibility, questioning about the value, the real value about the currency and the assets there. So I think this market seems to seesawing in between the two sides, and that potentially expand the fundamental pressure putting on the yen.
When it comes to Korea, obviously the weakness in the won remains an advantage there if you're comparing to whether Japanese equities are going to get much boost out of the yen. But there's still this policy approach of going all in on AI, right? The investment that we're talking about from the likes of Samsung, for example, with the government encouragement. How much further to run would you say there is in that market? And do you still see opportunities despite, of course, what has been explosive rallies that we've seen this year?
Well, yeah, I think that for the Kospi, it's definitely a big story this year. And there's two sides that's very interesting about this market is that everyone knowing that this is very overcrowded. It's basically just two companies do the heavy lifting. That could potentially come in a big risk as what we just discussed. But on the other hand, if you're looking for the valuation-wise, the valuation for the Samsung and the SK Hynix, they're still trading about 6 to 8. The forward earnings, the P ratio is only about 25 to 27. So if that's level very compared to the TSMC or NVIDIA, they're still quite significantly low. I'm not saying that it's cheap, but it's just saying that what sort of valuation we need to put in a AI companies that is out of the US. Should we continue to put in a discount for all the AI players outside of the US market, or what is the real valuation we should be looking into the Korean market? I was saying that its valuation stage was still back for the hype, back for the investors to join this hype. But on the other hand, it's just the real risk there is that it doesn't come with the protection nets, and that's a real risk for any investor to join the market or scare of the missing the heights to get into the Korean market.
Hebe, always great to chat with you. Appreciate your time. Hebe Chen, who's a senior market analyst at Vantage Markets. Taking a look at a couple of the stocks that we're watching. We mentioned before South32 and Alcoa are both on the move in different directions. Alcoa off by just over 4% there. South32 putting on almost 10%. That is the most in at least 3 months for South32. Alcoa agreeing to buy their bauxite, aluminum and aluminium assets in a $5.6 billion deal there. $3.1 billion in cash, $1 billion in shares, $750 million of net debt and lease liabilities being absorbed as well. So this is a significant expansion of Alcoa's footprint when it comes to aluminium. The price of aluminium has been up about 3%. There's been a lot of supply disruptions, particularly when it comes to what's going on with the Middle East and some of the supply chain issues there. But it is seen as a key component metal when it comes to both the AI trade as well as the energy transition, space usages, etc. So very important for Alcoa, but that share price is trending down at the moment. More ahead on the Asia trade. This is Bloomberg.
And we have new insight into President Trump's finances. He has reported yearly earnings of at least $1.4 billion from crypto and meme coin-related businesses. That far exceeds the income from his hotels and golf resorts, renewing concerns that he's profiting from the presidency. For more on Trump's annual financial disclosure, Bloomberg government editor John Herskovits joins me now here in the Tokyo studio. What's the extent of all of these investments?
Yeah, it's enormous. And we're seeing, as you mentioned, 1.4 billion, and they're from really big sources. Like the World Liberty Financial for Trump generated 594 million. CDC Digital behind his meme coin, that was 636 million. Now, if you just compare this to something like Mar-a-Lago was nearly $80 million. Didn't get that far. Golf courses, maybe there's one in Virginia about 25 million. So the main source of his income is from these crypto ventures, and it's just dwarfing his other holdings. And they span a large array from real estate to various other businesses, but this is where he's getting his money, and it's coming in very large chunks.
A sector that he was very supportive of going into this second presidency, of course. Give us a big picture then.
Sure. I mean, according to the New York Times, since he's returned to the White House, it's about $2.2 billion of income. And we have the critics saying there is a huge conflict of interest. We're seeing trades in companies which are managed by the government, NVIDIA, Microsoft, Apple. The White House is pushing back, saying that these are done independently, sometimes automatically, but the money, unlike other presidents, isn't going into a blind trust. The White House says there's a wall there, the critics say there isn't, and the funds are enormous.
Do Americans care, especially as we're going into the midterm elections?
Yeah, that's the key thing. How is this going to play out politically? People have known about it for a while. The critics have been quite vociferous about this, but Trump just still goes forward with it. In a few months, we'll see how this plays out in the elections. This is an issue that has come to the forefront among Democrats. Whether it turns into votes or support at the local level for the congressional races, for the Senate races, that remains to be seen. But this is one of the things which the Democrats will use to attack the Trump administration.
John Herskovits, Bloomberg government editor, here with the latest on President Trump's finances. Here in Japan, we're also watching Japanese Prime Minister Sanae Takaichi's three-day trip to India on Wednesday, where she'll meet with her Indian counterpart, Narendra Modi. They'll discuss economic and security ties with an eye on China's growing influence. Bloomberg Politics reporter Sakura Murakami joins me now with a preview. What would constitute success for her trip here?
Yes, for Prime Minister Sanae Takaichi, she's flying out today, but there'll definitely be a focus on economic security, specifically in areas like semiconductors and also critical minerals. And last year, Japan pledged that they'll invest about 10 trillion yen into India over the next 10 years. India is very important for Japan. They're an important market. A lot of Japanese businesses see great business opportunities there. So a lot of economic security, a push on defense as well. That's the kind of successes that Prime Minister Takaichi would want to see.
A lot of Japanese CEOs that I've spoken to have been so excited about the Indian market, especially when it comes to building that supply chain around artificial intelligence, as you mentioned. And this is so critical, right? At a time when Japan is also feeling the pressure from China when it comes to critical minerals.
Yes, absolutely. And for India as well, there's relations with China has been a bit dicey at times. And also for Prime Minister Modi, his relationship with President Trump hasn't been that great either. So there's this shift away from these bigger powers and trying to seek a partner in Japan. And that's through the economy, as we've discussed in businesses, and also through defense and free and open Indo-Pacific vision that Japan has put forward, and Prime Minister Takaichi is also going to be pushing this time around as well. So there's this shift away from the bigger powers and this focus on how Japan and India can work together as don't know if you can call it middle powers, but as big economies.
Yeah, especially given how much more importance it's given to bilateral ties these days, given the multilateral frameworks like the Quad, or even the U.S.-led Indo-Pacific strategy sort of has been put in the back burner with the Trump administration, right? When it comes to different sectors that you're watching, what will be important during this trip? I mean, we talked about semiconductors, but we've also seen that in the past, the Japan-India relationship very much centered around development, infrastructure as well.
Yeah, so I think there'll be interest in, for example, example, exploration of exploring possibilities for mineral exploitation. So that would be something on the government level, I think. And also things like, more broadly, there might be discussion on currency and kind of making it easier for Japanese businesses to do business in India. There's also, on a broader level, on a bigger level, I think Japan and India will probably be pledging deeper security cooperation. That's a big interest for India and obviously for Japan as well. We might not see any specific deals this time around, but the reaffirmation of ties there will be important for both countries.
Especially as we're seeing a more assertive China in the region as well. Sakura Murakami, Bloomberg's politics reporter, here with the latest on that 3-day trip by Prime Minister Takaichi to India. We do have more ahead on the Asia trade as we continue to watch the markets early in the Asia session. We are seeing some gains for the Nikkei and the Kospi, and of course, we continue to watch the tech sector and the latest news around Anthropic, not to mention, of course, the Philadelphia Semiconductor Index seeing its best quarter ever overnight. This is Bloomberg.
Alcoa has agreed to buy South32's bauxite, alumina and aluminium assets in Australia, Brazil and South Africa. The deal cements Alcoa's position among the world's largest producers as long-term demand strengthens. Let's bring our metals and mining reporter, Paul-Alain. So, Paul, in terms of this deal, why was it so key for Alcoa and its broader strategy?
So, as you mentioned, Alcoa now becomes cements its position as one of the largest aluminium producers in the Western world. Alcoa, for a long period of time, particularly in Australia, has really been pushing to find new reserves of bauxite, which is the ore that becomes alumina, which in turn becomes the metal aluminium. For Alcoa, its reserves were starting to fall, hence why South32's assets in Western Australia looked so good, but it's also about scale for Alcoa. It now adds a massive aluminium smelter in Hillside that is quite profitable. It adds those bauxite reserves and it adds an alumina refinery as well in Western Australia. So for Alcoa, it's all about scale. It makes a lot of sense. For decades, people have talked about a potential tie-up of the assets in Australia. Geographically, they're very close. Alcoa already has a presence in Western Australia, and South32 is around the corner, so it makes sense to put those two things together. And also, Alcoa had been facing some ESG struggles in Australia, where people were concerned about their mining operations in southwestern Australia, near Jarrah forests, and its impact on the local environment there. This now gives them assets that are a little bit away from those forests, and really helps build its ESG options there too.
What are the implications for South32 then?
That's a great question, because South32 has always been known as a company with a vast amount of bauxite, alumina and aluminium assets. You know, these account for a huge chunk of its earnings, a huge chunk of its revenue. It's now basically lopping off about a third of its business and selling that to Alcoa. Today, in a earnings call, in a call with shareholders explaining this deal, the new CEO, who's only stepped in today, Matt Daly, said that the company is going to be focused on copper and zinc under his term. They're really focused on base metals. They see a lot more growth in copper than they were seeing in aluminium, so that was something that spurred this deal, and also an option to keep a finger in the aluminium business, because this deal is structured not just as cash but also as shares in Alcoa. So about $1 billion worth of shares in Alcoa, or around about 6% of that company, will now be owned by South32 and its shareholders.
Paul-Alain Hunt there, metals and mining reporter. And these are some of the other top corporate stories that we're also tracking. Susquehanna has won a court order freezing brokerage accounts it says are tied to a $100 million insider trading scheme. It's also able to subpoena brokers to identify account holders. The firm alleges it lost more than $70 million to traders it believes were tipped off. This ahead of China's May crackdown on cross-border securities firms. Toyota is setting up a joint venture with air taxi maker Joby Aviation ahead of a planned additional investment of $250 million. Toyota became the California-based firm's largest shareholder last year. The U.S. is yet to certify commercial operations for Joby's electrical vertical takeoff and landing vehicles. Take a look at how U.S. futures are trading after we saw gains in the previous session. Overnight, we had the best quarter in 6 years for the S&P 500. The Philadelphia Semiconductor Index also seeing its best quarter. Now, what we're following is the tech AI trade, Anthropic pushing deeper into life sciences, and just now breaking that the U.S. has lifted export controls on key AI models, including Mythos 5. We continue to watch the Treasury space because we had seen that sell-off in the overnight session. We had stronger than expected job openings numbers unexpectedly rising, not to mention that the U.S. consumer confidence numbers also edged up. We had seen falling gas prices offsetting some of those concerns around the labor market. So you continue to see that buildup of July hike bets for the Federal Reserve, as we're also setting up for the key macro catalyst this week, which is the U.S. jobs report, and you have a stronger U.S. dollar as well, with all Treasury yields rising. And don't forget, you have the World Cup also happening in the U.S. Usually host currencies rise. This is Bloomberg.
Take a look at how Asian markets are faring at the moment. We are seeing broad gains thereafter. The tech session in the overnight session was quite positive, really capping off the best quarter for Asian equities in 17 years. We see the rally continue in chip makers and signs of economic resilience both in the consumer and the labour market in the US, adding to that optimism about earnings and that outlook there as well. At the moment, a bit of a bifurcated session as we see the Nikkei 225 ploughing ahead 2.25% higher as the yen continues to languish at those 40-year lows. The Kospi, though, flicking to negative territory there, and we're also seeing downside of about 0.5% when it comes to trading in Australian stocks. Kospi just really fluctuating between gains and losses. We are getting some breaking data when it comes to some of these forward indicators for Asian economies. We've got a slew of Asian PMIs just crossing the Bloomberg. This ahead of China's PMI numbers set to be released over the next hour. That'll show, no doubt, the continuation of that two-speed economy there. But at the moment, we're seeing some of these other major economies. Indonesia is an interesting one, of course, given the recent market woes. Manufacturing coming in at 46.9 there, so really falling well below that contraction level. Japan, more or less staying unchanged, perhaps a little bit weaker. And South Korea, actually down by to 52.1 from 54.8, which is quite interesting given, of course, the big expectations from the AI economy there. Taiwan also seeing a weakness to 55.2, but of course comfortably above that expansion level, and rounding it out as we see that weakness trend continuing in Vietnam as well in these readings. Shery.
Yeah, we've seen pretty solid numbers out of Japan, including the Tankan survey, positive sentiment among businesses earlier today. But take a look at how Japanese assets are trading, because we're seeing some broad gains, especially when it comes to metal stocks, industrials, and of course the tech sector. We have seen the Philadelphia Semiconductor Index seeing its best quarter ever. We are seeing that translate into the AI trade in Japan. You have the likes of SoftBank, very much exposed to OpenAI. You have Tokyo Electron, equipment maker, really gaining ground, some of the big leaders in today's session. You're seeing also JGBs continuing to be pressured. There's a fiscal risk narrative that continues to play out. And don't get me started on the Japanese yen. Still 162.66, weakest level against the dollar since 1986, which begs the question, where's the next red line? Let's bring in Jesper Cole, expert director of Monex Group. Jesper, great to have you back. Is there a red line at this point for Japanese authorities?
Look, I think at this point, there isn't. Quite frankly, corporate Japan is extremely happy about the continued windfall gains they get from yen depreciating, making their profits stronger. And from a policy perspective, there's a very clear recognition that first and foremost, we got to continue the path of expansive fiscal policy plus only moderate increases in interest rates. So for all intents and purposes, we're going towards 200 on dollar yen.
Yeah, when it comes to those profits, car makers, according to their own outlooks, we are seeing $6 billion of that profit windfall this year. The Tankan survey are pretty strong. How much does all of that translate into the little guys, Mr. and Mrs. Watanabe's, who are actually facing the consequences of much more expensive imports while you have inflation as well?
Look, Shery, you make the important point. The weak yen is great for corporate Japan, particularly for big companies, but it's bad for Mr. and Mrs. Watanabe. For every 10 yen of yen depreciation, Watanabe's purchasing power drops by almost half a percentage point. So that's quite a significant tax that is being imposed. Now, conversely, what you do see is that the powers that be, the Ministry of Finance, and yes, Prime Minister Takaichi as well, very, very happy because every 1 percentage point increase in inflation does actually increase tax revenues, by a very significant amount. So it's actually good for the government, good for corporations, bad for the people.
I mean, you alluded to the political pressure, talking about the BOJ's gradual normalization as well. When will all of this political pressure actually come from the Japanese people when it comes to the Takaichi government if they don't do something about how much more expensive things are getting for the average Joe out there?
But look, I mean, it's very interesting, because, everybody knows that the currency is a reflection of the policy mix of what the Bank of Japan does and what the Ministry of Finance does. And for all intents and purposes, there is no radical change that is likely to be forthcoming. Now, Cheryl, what is the break? In my personal opinion, the break is going to be home affordability. Already, the increase in asset inflation, and I'm not talking about the stock market, I'm talking about real estate prices, has basically made it so expensive that if you're a graduate from the best university, working for the best company, and you want to buy that average apartment, in Tokyo, it now costs you almost 50% of your income, which is exactly where it was in 1987-88 when the previous asset bubble got going. So I think it's going to be real estate asset prices and home affordability. When that starts to enter the policy conversation, that's when the Bank of Japan is likely to become more radical.
So you have now the Takaichi government unveiling one of Japan's largest industrial policies in decades, right? We're talking about 370 trillion yen in an investment plan that spans through AI, semiconductors, defense, shipbuilding as well. How much of this is actually going to trickle down to households at some point and stoke demand in the economy to lead to that economic sustainable revival that the government wants to see? Or is this a separate issue?
No, it's a very separate issue, Shery. You make the important point. I mean, just look at the Tankan this morning. The key takeaway is that business investment expenditure, Japanese company investing back in Japan to build new factories, new logistics hub, to upgrade their IT systems, etc., is now growing again double-digit for the third consecutive year. So the corporate metabolism is very much on fire. That creates jobs, yes, for the younger generation, but the pain point for the older generation having to pay with prices rising faster than wages for the retired and for the old people, that's going to continue to be this bifurcation. But where Takaichi wants to take the economy is very clear. It wants to make Japan stronger, and that means corporate Japan first and foremost, the people afterwards.
Okay. Oh, wow. Those are some strong words. Corporates first, the people afterwards. So let's go back then to where we started the conversation, the Japanese yen. At what point do authorities start to get uncomfortable? And I guess, will it even make a difference right now when you have the broader macroeconomic backdrop with what the Fed is doing, with what U.S. economic data is doing?
No, Shery, and this is the important point that you brought in. Right now, intervention, would just be fueling the fire. Every speculator would be very happy because we've obviously seen a switch in sentiment vis-a-vis the Federal Reserve, that a rate increase may be on the cards, more likely than a rate cut under the new Fed governor. Be that as it may, but right now, the fact that I can borrow at 1% in Japan, that I can invest at slightly more than 4% in the United States, making that carry trade. That's what everybody is doing, whether you're a macro speculator or whether you're a Mr. and Mrs. Watanabe.
And Jesper, before I let you go, and I know that this is a difficult question because it's actual policy making, what do authorities need to do at this point in order to put corporates and households first?
Look, I think, the reality is it's going to be corporate first. I mean, it's very clear the 370 trillion yen package by Prime Minister Takaichi, that is a massive resource mobilization, where, yes, the focus is on having Japanese corporations invest here in Japan rather than in Asia, rather than in the United States of America. That's going to put stress and strain on the labor market because there is a shortage of skills everywhere in Japan. So from that perspective, you will see wages, particularly for the young generation, accelerating much, much faster than what is currently anticipated. So you're going to see first most investment by corporate Japan, that then in the second round is going to start to lead to higher wages, but skewed towards the young generation.
Right. Let's just see how long Japanese households can wait for that to trickle down, right? Jesper Cole, always great to have these conversations with you. Thank you. Expert Director at Monex Group, Haidi.
Yeah, Shery, I always find it interesting looking at what Japan is grappling with, and there's a lot of economists saying like China should be learning some of those lessons when it comes to the situation for these households and demographics, right? But take a look at how we're setting up ahead of the Greater China Open. It is such a bifurcated market right now when you talk about Chinese stocks. Of course, if you take a look at the chip names, the semiconductor and hardware tech names, the Star 50 index, we're up, 65% in the first half of the year. Really, that AI supply chain story well and truly alive in China as well. Elsewhere, though, if you take a look at the Hong Kong side of things, the Hang Seng Tech Index, for example, we're seeing some big declines. Hong Kong is closed for handover day, of course, but we're also looking ahead to the private gauge of PMIs coming through in the next hour as well. EM's headed into the second half of the year with some renewed positivity. The Chinex index of tech hardware names has rallied. The Chinese yuan also boosted by strong PMI data. And futures are indicating strength in Taiwan after TSMC jumped in US trading. Let's get back to Anthony in Hong Kong. So, Anthony, we've kind of talked about this bifurcation in Chinese markets, right? Where are the strengths right now?
It's very similar to what your guest was alluding to in Japan, right? You have this fiscal expansion powering AI data center growth, and the AI data center ecosystem in China is on fire. There's a lot of names that are up around 100% on the year, kind of Korea-like names, right? That in the optics space, in the server space. So the Chinex index is doing very, very well against the Chinese internet space that is buying this data center capacity. So that bifurcation continues to be very strong. It had a very strong session as well on yesterday's close. We had the Chinex up almost 3%. So we're going to be looking at that coming into today, like how much momentum is there in these China tech stocks. And also you're seeing a very similar dynamic in Taiwan. Taiwan is the world's beneficiary of everyone building out their AI data center infrastructure. And the broadening out of the rally in Taiwan has really done some work. You're seeing names that are up 300% year to date now, after TSMC is up only, quote unquote, 50% on the year. So Taiwan is really having a boom time. I have to mention that last night TSMC ADR premium popped to above 25%. It's the first time it's traded at that level since January of this year. So quite an aggressive mark on the TSM ADR premium into the second half of the year as well, highlighting how bullish the sentiment is in Taiwan.
Bloomberg Markets reporter Anthony Stevens there. We do have more ahead on the Asia trade. This is Bloomberg.
Take a look at some of the big tech movers across Asia today. We have Samsung and SK Hynix giving up some of those gains that we saw in the previous session. The Korean stock market has suffered recently from foreign selling. We had record liquidation of 7 trillion won or so on the Monday session alone. So there's been a lot of volatility. But when it comes to the Tokyo equipment sector, it's been the big gainer when it comes to all of those billions of dollars of investments coming from both Samsung and SK Hynix in South Korea. For example, ASML in the overnight session hitting another record high, and you have the Tokyo Electron stock as well at the highest levels on record, gaining for a third consecutive session. Of course, also helping the narrative around artificial intelligence are these new developments around Anthropic. The U.S. government now has removed foreign access restrictions on Anthropic's Fable 5 AI model. For more, let's bring in Bloomberg's Ming Lo. Ming, what do we know about this AI model, the backdrop, and why the restrictions have been now lifted?
Yeah, this came a couple of weeks after the U.S. government had told Anthropic that it needs to seek approval before allowing foreign access to two of its most advanced AI model, including Mythos 5 as well as this Fable 5 model. And a few days ago, we reported that Anthropic had made certain adjustments to address some of the national security concerns, causing the U.S. government to then lift some selected restrictions on the Mythos model. So certain vetted companies like critical infrastructure providers or cyber defenders will be able to access it. But now we're hearing that the government is now lifting foreign access restriction entirely for the Fable 5 model. Now, Fable 5 is a less powerful version of Mythos that is expected to be public-facing. So this is certainly positive for Anthropic and certainly positive for its valuation ahead of its IPO, though details are pretty scant at this point as to exactly what sort of changes Anthropic has made to its model to address some of the national security concerns.
Some of the big innovation coming from Anthropic, though, has not been positive for a lot of those software names trading across the U.S. We saw that downside in the overnight session as well, with Anthropic launching a new tool for research in life sciences.
That's right. This is a new tool for scientific research. It's called Cloud Science, and it will help to automate research and automate some of these multi-step tasks for scientists, such as querying multiple different sources of information for answers. It combines a number of tools that are commonly used by scientists and provides access to more than about some 60 scientific databases. And interestingly, Anthropic also says that it hopes to get into AI drug discovery as well. And of course, after Anthropic released such a tool, right, the same thing that we saw last time when it released tools for financial services, legal services, we had seen markets being rattled by it, although this time Anthropic did reassure that they're hoping to target areas that are outside of what traditional biotech and pharma firms would consider attractive. But certainly interesting to also keep an eye on whether Anthropic will be successful in making good on this declaration of using AI to target drug discoveries.
Bloomberg's Ming Lo there with the latest on Anthropic. We have more ahead on the Asia trade. This is Bloomberg.
Taking a look at Nike trading after hours, they're down by 2.5% still. This is a company facing some tough times. Executives giving a cautious outlook. They're saying that they are doing a comprehensive reset in China. They're seeing pressure when it comes to discretionary spending and consumers as well. There will be an investor event in November, but executives really sounding a bit concerned about elevated consumer anxiety. The China market in particular has been a point of weakness there, with the stock down 36% this year. It seems like that turnaround, investors are really losing patience in how quickly it's happening, or I should say how slowly perhaps it's being seen to be happening. That persistent softness in the Greater China market is a point of weakness in particular. Results there are down 12% from a year earlier. So Nike continues to expect a slowdown in the coming quarter compared with the current period. The timing of wholesale shipments in North America is one of the factors that was addressed there as well. Elliott Hill has led Nike for almost 2 years now, and there's been that attempt to recapture growth, but progress has been slow and investors are growing ever more frustrated there. Well, the eyes of the sporting world may be on the FIFA World Cup right now, but Chinese basketball star Ming says his sport is still the most popular internationally. The NBA Hall of Famer spoke to us about the global reach of the top US leagues and how the sport connects America and China.
Basketball is the most popular sports in the world. I know this, FIFA's World Cup now is probably top is headline for all the newspaper today. But I have to say that basketball is shoulder to shoulder in China compared to football or soccer, what you call. And that influences so many of the young generation that they play on a basketball field every day after school. Sometimes they skip school for that. After me, there's many young fellows who joined the NBA. Last year we have a young player called Hansen Young, who joined the Portland Trailblazers. I'm sure there's many young players like him that eager to reach their sky, hopefully here in the next few years. So basketball really connecting us together on the same field, and that's the magic of it.
Well, one of the places that the NBA is trying to expand is in Europe specifically, trying to build a league there. Are you in any talks? Do you have any interest in potentially being part of the ownership process?
That's a big news, obviously. Yeah. It's a very big news, and I have a few European friends. We're talking to each other once in a while to see how that's going. So, I wish all the success. I'm sure NBA have their rich experience to help this being a success, and I'm sure they will bring this sport to another level.
I am curious about the cultural impact. When we talk about the NBA's impact on China, and obviously the exporting of our brands, whether it's Nike and some of the other brands out there, Reebok, which you were a part of as well. We're also kind of, to a certain extent, seeing the reverse of that. We're seeing U.S. players now getting endorsement deals with Chinese firms. And I am curious as to what you see over there with regards to how younger consumers, the types of brands they're looking for, the types of products they're looking for.
It's very nice interaction. Stephen Curry just signed with the Li-Ning brand, which is a huge impact. Everybody excited about it. And the Li-Ning brand, his founder, Mr. Li-Ning, is a national hero for us. When I was young, he won an Olympic title back to 1984 in Los Angeles. He's a national hero for us. And now, imagine, those. There's a hero from the older generation to the current generation that's really make a lot of. I'm sure that will be a very successful cooperation, and I'm really thinking that will be not only one, there will be more coming.
Well, I'd love to talk a little bit more about your investments, because one of them is the Asian University Basketball League. Nets owner Joe Tsai also is invested there. Talk to us a little bit about what your thought process was behind that investment and what you're hoping that, that can achieve.
I'm always excited about NCAA. The NCAA, besides NBA, NCAA is the most successful basketball brand in America. That for sure. And in China, that we have our college basketball league too. But also Asia, especially Asia is a big market, and there's many famous college basketball team that are out there. And I spoke to Joe that we agree that they need a platform that can put everybody together, and we're sure that in that area we somehow, hopefully in the future, after a couple of years, that we can create similar things like NCAA.
NBA Hall of Famer Yao Ming speaking to Bloomberg there. We have a little bit of a mixed picture across Asia today. Japan leading the gains in today's early session. We had that Tankan business survey coming in pretty strong in Japan. We also had strong export numbers out of South Korea, but the market there pretty volatile and the Kospi losing about 0.9%. Hong Kong is away today on holiday, but the China show is next. This is Bloomberg.